We've had the US election and it did not go as the forecasted expected. It was a little bit different. And perhaps looking forward, things will not be as expected again. So be prepared to be surprised. We've seen before that words and actions can be quite different. So let's see what happens. If we look only at the words that have been said, then there are probable effects on US stocks and on gold trading and on forex trading that I think are really interesting. 2025, 2026 are going to be huge years in terms of volatility and understanding the markets. I think the opportunities both in US stocks and in gold and in forex are going to be enormous if people can really understand what those assets are all about. So let's look at those one at a time. US stocks for a start. One thing that would drive up prices of US stocks would be good deregulation, US shoring production, and a number of things like that. Consumer confidence may be going up. So those things would drive US stocks higher. On the other hand, recession might hit. If that happens, then that might be part of broader geopolitical shocks. Those might drive stocks down, and like we said before, expectations might not be met. There might be policy shifts that we didn't expect, so we don't quite know. So yeah, US stocks might have a lot of volatility, and of course if there is volatility, then there's opportunity for traders. Also, when thinking about US stocks, we need to be quite specific about which sectors that we're thinking about. For oil and gas, the president-elect has spoken about drill, baby, drill, as in increased production very much. That would have a big effect potentially on oil and gas stocks. Tariffs, if they're introduced, may strengthen US steel companies. That's possible. There's been talk about big deregulation in the area of finance, and if that happens, then bank stocks might benefit from that. Renewable energy stocks may be hit if the words said about renewables are turned into action. We don't know if that's going to happen, but in that case, renewable energy related stocks may go down quite a lot. Pharmaceuticals and medicines are things that have been in the crosshairs of the president-elect quite a lot. He's said quite a lot of negative things about pharmaceuticals, so they might be in trouble. Don't know. And of course, any company that relies on seamless global supply chains may be in trouble as well. And there are other things that we need to think about. The efficiency of government, when people are chosen based on friendships instead of competence, might play in or might not. I don't know. And again, back to supply chains. Supply chains may be changed by friend shoring and so forth. So a lot of effects on US stocks if those things happen. The North American free trade deal is also due for renegotiation shortly. So that again might have an effect. So US stocks as a whole might be quite volatile in 2025 and 2026, and might therefore be interesting to specialize in. But it's not the only thing. There are other things going on as well. If you look at the total amount of debt that the US government owes today, it's $35 trillion, which is a number which is so big it's really difficult to understand. And out of that $35 trillion, $9 trillion needs to be paid next year, which means that the government will need to borrow $9 trillion from somewhere. That will again cause risk. So how will that be perceived by the markets? Let's see. That debt is incredibly big. If you look at the month of October only, October 2024, then the US government ran a deficit of $257 billion. Now, that's a really big number. And that's only in 1 month. So how come there's such a big deficit in October? Well, it's the same as September pretty much, and same as August, and same as September the year before pretty much. So that's the typical deficit that the US government runs each month. And the underlying reason is that Americans are shopping. They have systematically over the last 30 years spent more money than they have. And the way that they finance that is by borrowing money in massive amounts. So you can see from this chart here that the difference between how much the GDP delivers and how much people spend or companies spend in total in the US has been different for the last 30 years and typically runs at about 2 or 3% difference. Now, in normal economics, that would mean that sooner or later you have to change your habits. But that's not what the president-elect is talking about. Instead, the president-elect is doing the classic politician trick of saying, let's blame it on the foreigners, let's blame it on China or whoever, which of course is more convenient than going to the electorate and saying that, sorry, you have to accept that we have less money going forward. Sooner or later, this debt bubble will need to somehow be adjusted, and I don't know how, and I don't know when. Looking at the last 30 years, no one has made any attempts to solve these things. Will the president-elect do so? I don't know. Based on history, the answer is no. But it can have an effect, because if you look at it from the outside, then you ask yourself, well, is this really something that I can put my money into? Should I not be hedging into gold instead of holding all my Federal Reserves in US dollars? Or like BlackRock said, maybe I should be hedging into a crypto like BTC or USDT or some such. So gold hedging is on the cards, and of course also anti-Western countries may very well be diversifying from USD into gold for other reasons. So look at the Bitcoin price. BTC has gone crazy in the last period. That's really interesting. It might be driven by some of these things that we've just spoken about. Gold prices in 2025, 2026 may very well be driven by these things, which will, in that case, give perhaps volatility. And again, these are areas that traders really love, because if there is volatility, then there is money to be made if you are a trader. Understanding other people's reactions to these things is key. So this comes back to classic trading, of understanding the psychology of trading, the anthropology of trading, and the historical background to these different assets. And it plays even forward into Forex areas as well, because one of the subjects that's been touched upon by the president-elect is tariffs. And okay, so let's put these enormous tariffs on China, let's put these enormous tariffs on other countries. Well, someone needs to pay for those tariffs, and ultimately it will be higher prices for US consumers and companies, and it will perhaps also be lower revenues for companies that export into the United States. Now, what that means is that weaker companies that currently are outgunned by foreign companies will be strengthened in the United States, and they will need manpower, and they will pull that manpower from a limited pool of manpower inside the United States. That means that the cost of manpower will go up. So the combination of higher prices on imported goods and cost of labor going up means that inflation will go up, if that's true, if these things do happen, because we don't know, like I said. Also, there has been talk about removing 11 million people from the United States who are deemed to be illegal immigrants. They are, of course, lower paid, which means that their jobs will need to be replaced with people who demand more pay. And if there's a shortage of labor, then again, inflation goes up. If inflation goes up, one could argue that maybe interest rates go up. And if interest rates go up, then one could argue that the dollar becomes stronger. If the dollar becomes stronger, then that makes it more difficult for exporting companies to sell their goods abroad. So the effect of all of this may be that the tariffs cause weaker companies in the United States to benefit and stronger companies in the United States to be disadvantaged. Is that what was intended? I don't know. And what will be the response to that? Maybe more tariffs. So all in all, the way that the dollar moves against other currencies is going to be a key factor for this. And the dollar movements will be sensitive to these things. So anyone specializing in Forex is going to look at this and go, wow, there's more volatility coming. So there's going to be really interesting Forex trading. So with other words, for different reasons, Forex trading, crypto trading, gold trading are going to be really interesting subjects to specialize in 2025 and 2026. Hold on to your hats. There's a lot of action coming.